Hi everyone and welcome back to today's morning report. Charles Fraser's on Wednesday the 20th of January with me, Rich Pro Market Analyst at Handset Markets. Let's look at cable now, and we've just had this UK employment data out. It's not really going to help cable. I mean, cable had another big leg lower yesterday. The big turnaround actually from the morning. We had the UK inflation data out, which was actually fairly positive, and then we had a massive sell-off into the afternoon. That continued in the evening on a speech by Mark Carney, who basically suggested that there was no sort of program in place in the Bank of England for tightening, no pre-prescribed program, and that suggests certainly that sort of pushes back expectations of a rate hike, possibly into 2017 now, at the earliest. And this average earnings data that we had out today is not really going to help. We had average hourly earnings which came in at 1.9%, which is a fourth month in a row of decline, and certainly sort of wades into the whole argument that average hourly earnings are not picking up, and is not really going to be inflationary pressures in the UK yet. So that's certainly not helping cable in the medium term. But near term, we had a very slight gain of about 15-20 pips on that data, but yeah, nothing really major. But look at this chart. We've got the RSI at 15. RSI at 15, which is the lowest since 2014 or September 2014, when we had the Scottish referendum vote, when it got back to I think 13 on the RSI then. Big sell-off, but look at that sell-off on cable, and we're now back to levels not seen since 2009. We've broken below that 42.30, which was the May 2010 low. We're now back at these levels not seen since 2009. So really, really significant downside we're seeing. At I keep saying this, at some stage we're going to have to get a rally on cable, because we are at such record lows and we are so oversold. But at the moment it's just not coming through. Even yesterday we had that initial bounce, and then that was just completely and utterly sold into, wasn't it? And it just doesn't look very good at all. Here we go on the hourly chart. I've sort of zoomed out across January actually, because in January you've had such a good exhibition of technicals here. Old support becoming new resistance in the downtrend. Old support around just time and time again just became new resistance, or becomes new resistance. And the latest one is around 42.35, which was the lows in the last couple of days, and then that now becomes a basis of resistance. 42 figure is the initial reaction high of an intraday move yesterday, but certainly that is your resistance. But look also at this falling 89-hour moving average. How many times has that been the basis of resistance? Once, twice, three, 4 times in January that's been the basis of resistance. So it's again really strong technicals. Again on the momentum indicators, every time you see the RSI unwinding towards 60, it gets sold off, and then back below 30. MACD lines, every time you get towards neutral, sold off. We've had a minor sort of uptick on the MACD line, so maybe we're going to get a bit of a bounce, but that would be certainly a bounce you'd be selling into. That overhead resistance between 42 figure to 42.35 is your line of the sell zone. So I wish you good luck in your trading today, and I will speak to you later. Thank you.